Sure with Caldwell Banker Realty, and next to me is the famous.
Wow.
Yeah.
Kevin Kruse with Guaranteed Rate Affinity, one of the in-house mortgage lenders with Caldwell Banker.
So we're here today just to go over some stuff what's going on in the market here lately. According to the Realtor Association of Sarasota and Manatee Counties, there's been a continued demand and low inventory, which keeps the home prices really steady at this point. All the reasons sales have declined marginally from the previous year. The sales prices have bucked that trend in this area and have increased to 6.9%. And that's just coming in the last 3 or 4 days from the Realtor Association of Sarasota and Manatee County. And according to Florida Realtor News, which came on the 18th, 20 to 25% of the people are waiting for the mortgage rates to drop and for prices to decline. Are you seeing that, Kevin?
You know, I think 20-25% might be low, to be honest with you.
Really?
That's all I do is take calls from buyers. And a lot of people are waiting for rates to go down.
Yeah.
They think we're going to have property values go down, which we're not seeing. We're in an area here where we're at a moderate or just a conservative estimate of 5% annual increase in appreciation yearly. We're still in a high demand area.
Yeah.
So I get clients who call and they want to wait for the rates to go down. Mm-hmm. And to me, the rates should not be important to them.
Right.
Okay, let's give you an example. If you're looking at a $600,000 home today, rates are right now in the low 7, let's just say 7%, we're even a little higher there right now.
Okay.
And this client says, well, I want to wait. Well, he wants to wait that $600,000 home with that 5% annual appreciation rate. That $600,000 home in 3 years is worth $694,000. Okay. So what he's lost by waiting is almost $100,000 of equity he's lost by just sitting on the fence. If this guy wants to wait till it gets down to 5.5%, and you want to look at that, well, that's $694,000 value now, taking out the same percentage loan amount, his payment's going to be within $40 to $50 of where it would have been if he just taken it out the high 7% to begin with. So he's lost $100,000 in equity. He has also thrown away money if he's renting and spent, let's say you're renting for $3,000 a month. Mm-hmm. That's what, almost $100,000 you've thrown away on paying somebody else's mortgage. It's a huge loss to wait. My attitude is rates are a number in your head. If you can afford the house, it's the house you want, buy it. You will be refinancing within 2 years. And if history repeats itself like it does constantly in the mortgage industry, you will refinance the second time, probably within a 5-year period. So take advantage of it. My attitude is, you marry the house, you date the rate.
I like it. I like it. And you know what? I just pulled up on 3 zip codes, by the way, 34202, 34211, and 34212, which are really right around here. But I've come up with, in those 3 in the last 7 days, 49 new listings. And price decreases and increases on the increases, what we've had, about 5 and about 57 price decreases, and only a couple of those are new. So what's that telling us?
Well, what I tell you, what's happening is these people that are waiting on the fence to buy because they think rates are going to come down. Mm-hmm. We're in a weird market. We're in a very low inventory market and a low buyer market because the buyers are afraid of rates, and they should not be, as I mentioned earlier.
Right.
Once they start picking up and realizing that 3 and 4% interest rates were historic lows and they were low for too long. Once they realize this is maybe the new norm, it's time to start buying houses.
Yeah.
Our buyers pick up. Now all of a sudden the price of the houses start going up again, and we'll be back in the typical market we used to be in.
Great. Hey, you guys have a prosperous rest of your year, and thank you, Kevin, for joining.
It's nice joining.